Good morning. This is Tom Alexander. It is Sunday, December 4th. It is about 11:48 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly video review of the written report that all of you should have received. If you have not received the written report and you would like to receive it, it's free. Just send me an email to tom@alexandertrading.com. I'll put you on the list and you'll get it. Also, if you find value in this video, I would very much appreciate if you would hit the like button. Please leave comments. Please subscribe. All of those things are very useful and helpful and will help me grow this channel. And we'll keep it free. Okay, the stock indices. There's a bullish case and a bearish case here, as I outline in the report. I'm gonna let's take a look at the indices. So what we have here are the four primary U.S. trading indices, the cash markets. Friday's lows are important, but more important than that are last Wednesday's lows. That was the low, the conviction low, the latest Fed speak to the upside. There is really the key to me right now for further rally is if the Russell can join the party. The Russell needs to close above 1906. It has not been able to exceed its November highs. All the other indices, the three primary trading indices, the S&P, the NDX, and the Dow, all exceeded their highs. There is really nothing above present levels standing in the way of further rally, except for the Russell. It needs to show strength. It needs to begin to participate to the upside. A close below Friday's low by all four of the indices is an initial signal, price action signal that an important top could be in place. Let's take a look at the technical picture. And this is a really, really, really interesting chart. There's a lot to discuss here. First of all, there are lingering divergences in the moving averages of NYSE advancing issues. Now, the red is a 10-period moving average, in this case daily, of NYSE advancing issues. The green is a 5-day moving average, and you can see there are tremendous divergences here. Now, this can be erased. If we see strength next week, then we've never really reached an extreme in the 10-day similar to other extremes prior to tops. So that's on the table. Breadth continues. If you look down here at breadth, the blue histogram, that's NYSE advancing minus declining issues. The price breadth relationship continues to behave so far in a bullish manner, meaning we have, the short-term closes are in the level of bullish behavior. So as long as that continues, that's great. Now, there are cracks in the dam here as well. The breadth peak on the 30th, and I'm going to show a shorter term chart of this in just a minute. Last Wednesday was below that of the Wednesday ramp on the 10th, but price continues to trade higher. Now, I want to show you something else, and this is something not in the report. This was the peak in the 10-day moving average of breadth way back a year ago at the top of this, at the top of the market. Now, we've been are we in a bear market, or are we in some sort of correction and we're going to rip to new highs? I don't really know, don't really care, because I trade, and there's plenty of trades to be had regardless of the answer to that question, by the way. You can also see the 5-day moving average peaked right at the top of this market. Since then, each peak in the 5-day and the 10-day moving average of advancing issues has been lower than the peak we saw here. It came close in August in the 10-day, but not so much the 5-day. So there is that lingering longer-term divergence there. Another thing that's interesting, you'll periodically get negative 2,000 breadth readings, even in a bull trend. And in a bear trend, they will become quite frequent, and there's a typical pattern. Well, the longest we've gone without a negative 2,000 breadth reading since the January top was from June, the middle of June, June 16th into August 19th. Well, the last time we had a negative breadth reading, that was about 2 months. Last time we had a negative 2000 breadth reading was on 10/7. So that would mean that next week at some point would be the longest stretch since this stretch that we've gone without a negative 2000 breadth reading. Now, does that mean we're in a new bull trend and it's all systems go? Maybe. But if we are in a bear market, the clock is ticking there and we want to be alert. So you have numerous issues to watch here over the next week. And then I want to bring your attention to VIX. And this is another one that we have been following for quite a while. And I put in the report the pattern way back in the bear market that began in 2007, and a similar pattern then. That doesn't mean this has to repeat itself. I'm just showing it to you. But since the top occurred almost a year ago, we had below 20 VIX readings. We had below 20 VIX readings at the March top. We had below 20 VIX readings at the August top. And now we have below 20 VIX readings again. So this is another reason to be wondering if we aren't somewhere close time-wise and price-wise to the next significant top. We should be finding out pretty soon whether or not it's different this time and how significant this low is or was. A VIX below 20 and a VIX that continues to drop will be bullish for the market. However, if VIX begins to pick up, you want to follow price action very closely to see if it begins to give signals that a top is in place. Okay. Other stuff. And we'll start with gold here. I don't want to go in the order in which I have these contracts in the report, so I'm going to go up and look. Okay. I think gold has put in a significant low. Clearly, this pivot low here, this buying tail is important. This is a balance area. The gold broke to the upside out of this balance area. Now, there's some potential resistance in here, and gold is rapidly approaching that level. But I would be favoring longs in gold and giving gold the benefit of the doubt until price action proves otherwise. Okay, crude. Crude is approaching an important upside level for the bearish case. This is an important level back to the upside, and then these recent lows are critical to the downside. And we take a look at the US dollar. You got to favor shorts in the dollar. The dollar may have put in a very significant long-term high. We're making lower lows and lower highs. Now, could a rally occur at any time? Yes, it could. Where's quote unquote support? Well, I don't know. There's nothing here from price action that's recent that I can really point to. You know, there are numerous levels that sort of stair step down because the dollar had such a furious rally over the past 10 months or so. But I would be favoring shorts in the dollar on rallies. And last but not least, 10-year notes. Now, it's not surprising that the interest rate market and equities at the moment are trading in lockstep. And we basically had a crash in notes and bonds. And now is this just a rally and we're going to resume the downtrend, or are we going a lot higher? Well, The market is making higher highs and higher lows so far. So as long as that's the case, always default to price action. How high could this go? Again, there is nothing of particular significance above present levels from an auction market perspective that really stands out. So we'll just have to see. Guys, have a great week, and I will talk with you again next week.